Hello everybody, today I'm going to walk you through a quick example using Yahoo Finance just to plot some simple technical analysis tools that maybe you've seen in the Canadian Securities course or other investment textbooks. So simply I'm on Yahoo Finance. We're just going to do a simple analysis on the S&P 500. So the ticker is GSPC, top hat GSPC is the ticker. If we open this asset or this index up, we can see that we come to a page that gives you a chart and some basic information about the close, open, volume in the weekly range. But we want to go into this charting tab here. Yahoo has continuously been updating their charting tools for Yahoo Finance, and you can see here it's actually been recently updated over the summer of 2017. So you can see here is a simple one-year chart of the S&P 500. It's been a fairly good year for the S&P 500. Over the year, we're approximately up about 8.25% since November of last year, which is a pretty healthy return. And there's been a lot of changes since President Trump's election last November, and a lot of economic reform that he's proposing and trying to legislate now. But we're not going to talk too much about the returns and what's going to impact returns. I just kind of want to walk through some of the tools that Yahoo Finance has for you to kind of analyze different assets. So simply, you can see across this top chart here, these are simply some different buttons you can click on and bring up different types of returns. First, we're on one year returns using 1 day intervals. Now it's important to understand, once we go through Yahoo and we start clicking on different time frames, the interval is going to change in Yahoo. It's not going to be simply daily returns. For example, if we go to the 5-year chart, here's the 5-year chart of the S&P. You can see now the 5-year chart has changed the interval to 1 week. Okay, so this is important most of the time in Yahoo, especially when we get into some moving averages, etc. It just talks about the duration of each period. And so if we talk about putting a moving average and we're going to put in a period, and we put in 10, it might not be 10 days, it might be 10 weeks, depending on the length of the chart we're looking at. So that's an important aspect to always remember when we change through here. We're going to go from sometimes daily, sometimes weekly, and even if we go to the max, now it's going to be, the interval is on a yearly basis. Okay, so here's the chart of the S&P 500 dating all the way back to 1960. We can see some different time frames there that have impacted. This is a tech bubble here. This was the 07 to 09 market crash here, and we've been in a very strong bull market since that time. So this is great. This is just looking at a simple line chart. We can also look at different sorts of indicators on here. We can look at an area chart where it's just going to fill in the bottom of that. We can also look at the candle charts, which are very popular, not very good in this long time horizon. But let's say we go back to a 3-month time horizon. Here's a candle chart where you can see the green arrows are obviously positive days. So over the last 3 months, we can see we've had a pretty good positive run in the market. In the red blocks here correspond to negative days. So let's just drop this back to a month, and we can see these candles much closer and can be interpreted much easier. So if we look at a candle, we can simply see that this is a positive day, this green day here. We can see there's a box plus 2 stems. The stem on the bottom is fairly large. The stem on the top is somewhat short. But simply, what does this mean? It simply means that, on the bottom of this box here, this was the opening price on the day on November 3rd, 2017. The top of that box, the very top here, is corresponding to the closing price. So obviously it's going to be green. If it's opened here, closed here, that's a positive day. The box is going to be green. The end point, the whisker here on this box on the bottom side, is going to correspond to the low of that particular day. right? So at some point in the day, this asset traded down at some point in time and then rallied, more likely to close. And then the top point is very small on this candle, but the top point is the high point on that day. But that's an example of candlestick. We'll go into candlestick charts at some point in time in more detail in the future. So you can go down. They have other, bar charts, etc. We're going to stick with a simple line chart for now, and you can kind of explore through there. I'll do some, more videos that are going to go deeper into, especially candlestick charts. So you can play around in here and look at different time horizons, etc. Year-to-date charts. So over the year, the market's up approximately 14%, which is fantastic, going through there. So let's just stick with a one-year chart for now. You can go through over here, and especially if you've been through the textbook, etc., you've probably seen some reference to some various different technical analysis indicators. And here you can see that many of those are suggested here. Moving averages, Bollinger Bands, moving average, convergence, divergence indicators, and a host of others. Technical analysis has really somewhat taken off over the last decade and a half, with a little bit more computing power and graphical powers. It's somewhat, been a very followed, or more followed analysis in the past decade. Now there's still some controversy over the effectiveness of technical analysis, and many people will go back to always trying to find patterns. That's what we do as humans. We always try to find patterns, and you've probably seen some of that going forward. And whether we talk about the Dow theory or other technical analysis theories, this is what we're trying to find, right? Patterns in the data. And one way to find patterns is to use moving averages. And this is, probably one of the most simplistic examples of technical analysis. But moving averages are still very powerful, and many people still analyze these on a daily basis. So moving average, remember, we have a one-year chart that has daily data in here. It's going to talk about a period. So here, if we look at 50 periods, that's 50 days, and those are 50 trading days. So within those 50 trading days, it usually corresponds to approximately 2 months of a series. So we're going to stick with this to 50-day right now. We're going to look at the close price in terms of our analysis, and for now we're going to look at the simple. Now we can go through various other types of moving averages. Most common two are simple and exponential moving averages. We'll give you a quick example of both here in this video, but we'll stick with this simple moving average. We're going to leave the offset there, we'll leave the underlay there, and we're going to draw this in a red or somewhat fuchsia pink color. So if we click save and we draw that line, this is going to draw a moving average on this one-year chart, and we can see that it's follows this chart fairly closely. It smooths this original line here in the blue out a little bit, right? So we're going to take the past 50 days. Each day is going to be 1/50th of the sum of this moving average line, and you can see it tracks it fairly closely up until where we stand today. Many people use moving averages typically, and I hope you've reviewed some of this in your textbooks, is that moving averages are breaking through moving averages is sometimes seen as a bullish or bearish signal. Now, if the market breaks through the moving average from the top, like say in this example here, the stock market breaks down through the 50-day moving average, this technically would be interpreted as a bearish signal, right? That's not a good signal for the market, as opposed to, for example, in a case up here, we can see a little choppiness. But if the moving average breaks through, if the stock market breaks through the moving average from below, it's typically seen as a bullish signal. Okay, and again, depending on the different moving averages that we have, whether we use the 50, the 200, or sometimes even shorter, that's going to make a difference in terms of the time horizon that you may predict whether it's a bullish or bearish signal. And by no means do I want to say that I follow many of these technical analysis tools. There's been many academic studies, professional studies, etc., that lead you to believe that technical analysis doesn't have much use. If you believe in the efficient market hypothesis, you don't think the past historical price information is going to give you much indication of what's going to happen in the future. But that's for your own interpretation, and there's two sides to that debate, and it seems to be getting hotter and harder every year we go by. So that's a simple moving average. If we go back here and we go to a moving average, we can change the period. Maybe we're more interested in a smaller time frame. Maybe we want to only look at a 10-day moving average, which would generally give you a sense of the last 2 weeks in terms of the momentum that may be happening in the stock. But let's go back to the 50, and I'm just going to compare this to the simple now versus an exponential moving average. And so maybe some of you guys have seen this simple versus exponential moving average. Simply, guys, remember, simple moving average is taking the past 50 days in this example, or the time period, and here we're just going to, in a simple moving average, you're going to take each day is going to be equally weighted, as opposed to an exponential moving average. In an exponential moving average, days closer to today, the historical prices are going to be higher, weighted higher. We're going to see, that might give a better indication of, the most recent past, might have a better influence on the future path of an asset. So let's chart this exponential instead of simple. If we chart this, we should have changed its color probably a little bit. Let's go back in here. Let's change the color so we can have a little bit more contrast. We'll go with a green line. Save. Okay, a little bit hard to see, but you can see that the green line, right, this exponential moving average is the green line. The pinker line is the simple moving average. Remember, they're both 50-day moving averages. Okay, so they're still using the past 50 days. But you can see the green line somewhat tracks momentum upward and downward a little bit more sharply. It reacts a little bit quicker because, remember, again, here, for example, in this area down here where the exponential moving average is moving away from the simple moving average, it moves much quicker because, look, in the recent past, there was a sharp move upward. And so that exponential moving average is going to track that a little bit quicker than the simple moving average, which will be lagged a little bit in that tracking. And same thing on the downturns here, right? On the downturn, the exponential moving average, you can see here on the green line, we just highlight that green line a little bit, you can see the exponential moving average now reacts a little bit quicker to a downturn in the index itself. So that's a quick example of a simple and exponential moving average, and we're going to get much in more detail about some indicators and moving averages in some upcoming videos. But here, guys, for now, if you haven't been on Yahoo Finance yet, or you haven't used very many technical indicators, it's important you can kind of maybe go through some of this and maybe understand and just kind of play around with some of these different moving averages. It's really useful in learning some of the tools. And again, this is, Yahoo Finance has continuously updated their charting tools and mechanisms, and you can go through here. Like I said, we went through some lines. They've also added a drawing category. So here we can draw lines, we can draw arrows, we can doodle on there, we can do lots of different things. If I want to point your attention potentially to a breakthrough of a moving average, I can circle that. Not a very good circle, but I can draw this out, and this has been added to Yahoo Finance in the recent past. Okay, so That's just a quick rundown of introduction to some charting tools on Yahoo Finance. And if you do have any questions, throw them in the comment box below. If you are in my class, eventually we'll get into an assignment where you'll be doing some technical analysis on your own for a project, and you'll have to submit some stuff using this charting tool here. So thanks for watching, guys, and we'll see you later.